This is a very, very interesting real estate market in New York City, and the designer plans to live in the building. Woohoo! Hopefully, we have hit the bottom and now we're on our way up for October. Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of September 25th to October 1st. So, wow, welcome to October. Can't believe we just flew through September and we are off and running into the fall. We're going to get started, as we always do, with the luxury market, then we're going to move to the Manhattan market and then the Brooklyn market. Then I'm going to sum it all up, give you my thoughts and my recommendations for buyers and sellers. This is a very, very interesting real estate market in New York City, and there is a lot going on. So be sure you stick around, especially if you're an active buyer or seller. You're going to want to know what's going on so you can be making great decisions. Okay, so here's what happened last week in the luxury market. We saw a nice bounce. There were 20 contracts signed last week. That is a really nice bounce. This is for properties that are priced at $4 million and above. There were 4 of these properties that were priced at $10 million and above. 16 of these were condos. 2 were co-ops, 1 was a condop, and 1 was a townhouse. 9 were uptown, 11 were downtown. The number 1 contract was Penthouse 10 at 760 Madison Avenue. It was asking $25 million. It is a new condo. It's in the Giorgio Armani Residences, a little over 3,100 square feet. It includes 3 bedrooms, 3.5 bathrooms, has a wraparound terrace that totals almost 1,300 square feet. This is a 10-unit, 12-story condo building. It is designed by Cook Fox. Amenities include a doorman, fitness center, and a residence lounge. The ground floor retail space will be occupied by, what else? Armani. Penthouse 10 was sold to a local buyer. The building was quietly marketed over the summer, and the sales office, which opened a week ago, is reporting that half the units have sold. Closings are slated for next summer. The number 2 spot was West 27B at 500 West 18th Street. It was asking a little over $14 million. It was raised from $11,250,000 when the condo first launched in 2018. Remember, because we've talked about this project before, that it has 2 buildings. It has a condo and a hotel. And this particular apartment has a little over 3,100 square feet. It includes 3 bedrooms, 3.5 bathrooms. It has a 47 by 30 foot great room with city and Hudson River views. Amenities include a fitness center, 75-foot lap pool, spa treatment rooms, golf simulator, children's playroom, private dining, games lounge, and a garage. And also remember that the services are offered from the adjacent Faina Hotel, which is part of this project. We're going to talk now about the stats for last week. Total weekly asking price sales volume, $160,750,000. Average asking price, $8,037,500. Median asking price, $6,555,000. Average discount from original ask to last asking price, 8%. Average days on market, 707. That's it for the luxury market. We're going to shift over now, take a look at what happened in Manhattan. Then we're going to move on to Brooklyn. Then I'm going to give you my thoughts and takeaways. So be sure you stick around for that. And if you have any questions, please post those below. Start with the 1 week look. Supply 405 for the week, down a little over 7%. Contract signed saw a little pop, 139, up a little over 10%. Off market 173, also a little pop with that, up almost 8%, actually. If we take a look at the supply for the month, we did see a nice little jump with that, 1,984. That's almost 149% up. The contract signed down. Again, we would expect to see that. One thing to note, this we saw the contract signed for the month, 568. Normally in September, we would expect to see this at about 700, so we fell quite far short of that. And that was down about 28%. Off market, we saw that jump a little bit, a little over 32%, 734. This may be an indicator that there are sellers that are just getting very tired, not getting the prices that they want, and they're deciding not to sell. If we take a look at this market pulse, we're kind of back in this neutral market. If we look at the liquidity pace chart, this 30-day moving window, 568 contracts over the last 30 days, we see this really has declined, the contract activity over the last 30 days, although at the very end you see a little tiny rise. And we would have expected at this point to kind of hit the bottom back, over September. So hopefully we have hit the bottom and now we're on our way up for October. The supply ticks up over the 7,000 mark. This is still short of last year's levels, but if it keeps rising, and let's say we don't see a lot of contract activity, it's a little too soon to tell. We're going to have to wait and see. But if we look at this demand chart and we see as the liquidity ticks down again, we can definitely tell the sellers are getting frustrated. But if we've hit the bottom and we're going to start to come back up again, then, that's one thing. If we haven't quite hit the bottom and we kind of linger around with this lackluster contract buyer activity and we continue to see rising inventory, that will portend perhaps not such great things for the fall market. But we really just don't yet know because we're just at the beginning of October. If we look at the new listings, they generally remain on par with previous years. If we look at these contracts signed, it's hard to know, is this an indicator of a kind of a general weakness in the market? The data just tells us only so much, as many of you know from these reports and from your own experiences. And if you're a buyer or seller in the New York City market, that our data is a bit delayed, unlike other markets. It's a little too soon to totally call this one, but we are keeping a very, very close eye on what's happening every week so that we can get a pretty good idea of where things look like they're going to be going. That's it for Manhattan. Be sure that you reach out to me with questions. You can post those below. You can reach out to me directly at Sotheby's. Now we're going to move on to what's going on in Brooklyn. Then don't forget to stick around because I'm going to give you my thoughts and my takeaways and my recommendations for buyers and sellers in this very challenging market. Brooklyn is kind of in the same boat as Manhattan, although less inventory than Manhattan. We're just not seeing the inventory coming on the market. If we take a look at this 1 week supply for Brooklyn, we see 186 properties for last week, down a little over 8%. Contracts signed also down, 92 contracts signed for the week, down about 8%. Off market, 75, that's up almost 14%. If you look at the supply for the month for Brooklyn, 874, that's up a little over 44%. Again, we are seeing an increase for the month. But if you think about it, if September is the month where we're supposed to be seeing a lot of new inventory coming on the market, 874 properties is really not anything to write home about. So will we be seeing more inventory coming on as the days go on? Are we going to see more inventory in the coming days in this first week of October? It would be great if we would. It would definitely give those Brooklyn buyers more choice. If we look at contracts signed, 418, that is down 23%. Again, seeing a kind of a lackluster interest on the part of the buyers. September, that's pretty typical. However, for Brooklyn, a little bit of a shift because Brooklyn has been going gangbusters all this time, and now we're starting to see a little bit of a cooling off. Off-market properties, 315, that is up a little over 30%. If we take a look at the market pulse, we're in a neutral market, but it kind of dipped down. Now you can see it's starting to rise. The liquidity pace, which represents that 30-day moving window, 418, you can see it's a bit choppy, but overall there has been a decline. Perhaps we've hit the bottom, as we've hoped that we have in Manhattan. If we look at the supply, overall supply for Brooklyn, 3,257. I think the number to really be looking at, to give some historical perspective here, is that it is down, 10.9% from last year. That's really telling us that Brooklyn buyers just don't have as many choices. And the liquidity pace, we're seeing this 414. This is down almost 18% from last year. If you want to put it in a historical perspective, it's telling us that the Brooklyn market, from a buyer perspective, is kind of cooling off a little bit. If we look at this monthly contract activity and you kind of go into September, you see how it really falls off here, quite down, especially when you compare it to other years. So we can see that the September numbers in terms of contract activity really fell short, historically speaking, since 2020, even compared to last year. It really fell short. That's it for Brooklyn. And now I'm going to give you my thoughts and my takeaways, but I do want to circle back to what has happened in September, because I do think that this is going to be something that is on everybody's mind in terms of what this fall market is going to shape up to look like. So if we just kind of recap this, there were 20 contracts signed, 4 million and above, and 4 of those were in the trophy property category, 10 million and above. The luxury market is a bellwether for prices in the city. What we see from the data is that things are holding fairly steady in the luxury market, and that should give buyers and sellers a fair amount of confidence when it comes to price action. If we look a little more specifically at the Manhattan and the Brooklyn markets, we can see that in September, we did see an increase in supply, particularly in Manhattan. And actually, historically, we saw even a little more inventory come on the market than usual. We saw far less come on the market in Brooklyn. The demand in both Manhattan and Brooklyn is definitely down. And hopefully we've hit the bottom with that. And if we looked at those charts, and we can see that historically it's kind of quite a weak performance in September. And because of that, we have to wonder what the bounce back, when it occurs in October and into November, will look like. What will those prices be? And what will that contract activity look like? How many contracts are going to get signed? And what will those prices be? Sellers, this is going to be very important for you to keep in mind. And I can imagine at this point you're getting pretty tired. If you have been on the market for a while, you are surely experiencing some fatigue. This has not been an easy market for you. Sellers, very easy to understand that you're becoming fatigued. So you really do need to ask yourself the question, do you want to sell in this market? If you do, here's where I'm going with this. Fall market is short. If you're on the market and you're not getting the activity you want, adjust your price. Try to understand where you are in the market. Look at your competition. Price yourself accordingly. Make sure your asking price positions you as best in class so that you can attract the buyers, get your offers, work with those buyers, try to get your deal done. Try not to miss this fall market. It will last likely kind of into November, after which it will likely get quiet. We are heading into a presidential election year. Typically, that creates a certain amount of volatility and uncertainty in the real estate market. So the spring may or may not be a great time to sell a property. In a presidential year, it typically is not. So if you really want to sell, you want to get it done now. That would be my advice. If you have any questions, please let me know. I am happy to speak to you. Buyers, this is a great market for you. As I said, the luxury market is the bellwether. This is a very stable market. No reason to think that this is a market that's going to fall apart. It just is a market that has been full of, let's call it a lot of bumps in the road. And the buyers that are really serious and prepared and ready to go are really going to reap the benefits of the fact that there just isn't a lot of competition, and there's inventory that's available that has been on the market for a while, and you have you have sellers who are quite serious, who really want to sell, and you should be trying to make deals with them. And my advice is, if you really want to try to buy low and sell high, if you want to try to buy low and sell high, yeah, that's the saying. I would say this is the time to do it. Okay, that's it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Digs and to the Olshan Luxury Report. The work that they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what is happening in the New York City real estate market. In the meantime, take care.